Hi, this is Matthew Cratter from Trader University, and today I want to talk about infinite money, the stock market, and Bitcoin. So for those of you who haven't been following the news closely, what happened yesterday is the Fed, which is a central bank in the US, came out and said they were going to do something called quantitative easing infinity. Now that's a very fancy word that basically lies what's really happening. I have a very good graphic here of what's actually happening. What quantitative easing means is printing lots of money to prop up asset markets, to prop up the stock market, to prop up the real estate market, to prop up the bond market, etc. And you can see that this may be beginning to have an effect on the markets. Markets are up quite strongly today. We have really large companies like Apple and Microsoft up 6-7%, which is unbelievable when you think about how big these companies are. JP Morgan up 10%. This kind of money printing is very good for the financials. Also, gold up very strong. It looks like I exited this a little too early, but gold performing. Basically, when you print a lot of money, the value of assets go up, especially gold goes up because it is a limited supply. And we're really seeing that across the commodity markets. We're seeing gold, silver, platinum, copper, corn, soybean oil. You can see all the green here. A lot of it's stock market indices, but most of the commodities are benefiting from this money printing. Now, in spite of this, we have a situation where the stock market has fallen so quickly, so fast, that we still have a lot of ground to make up. And what's amazing is even with unlimited money printing on the horizon, the stock market has only been able to bounce weekly off the lows here. And you can see that we're approaching what's called a death cross, where the 50-day moving average crosses below the 200-day moving average, which leads me to believe that this is a fake rally in the context of a larger bear market. And what a lot of people don't realize is that really big stock market rallies actually happen in the middle of a bear market. And they're good opportunities to exit some positions, lighten your portfolio if that's something you're looking to do, and also can be a good time to go short, though that's obviously a lot more risky. But it's, again, quite shocking that with the promise of unlimited money printing on the horizon, that we're still not able to get a bigger move in the stock market, which simply means we're going to need to print trillions of dollars more. So I wanted to show you how this is going to affect Bitcoin. Bitcoin is one of the few assets that's almost back to its December 31st, 2019 price. So the stock market's down, whatever it is, around 25-30%. And Bitcoin closed last year out at around 7,000, 7,100, currently trading around 6,700. So we made back, we're almost break even. And this is going to be forced a lot higher, much higher even than gold or silver or any of those other hedges. And so I wanted to give you some real numbers here. A lot of you have asked for me to look at Plan B's model. And so Plan B is a Twitter account. He's a very smart quant from the Netherlands who works for a company that manages more than $100 billion worth of retirement assets. He's a very smart guy. He's a real mathematician, and he happens to be anonymous on Twitter because he still has his day job. But if you just go to Plan B, I guess it's at 100 trillion USD. You can see his pinned tweet at the top, which is his first Medium article. And what this contains, it's called Modeling Bitcoin's Value with Scarcity. A lot of people say it's impossible to value Bitcoin, but this is the best way that I have found to value Bitcoin. So let me just jump right ahead and show you sort of the punchline, and then we'll go a little bit more into the math. So just as a reminder, Bitcoin is currently at around, call it $6,600 per US dollars per Bitcoin. Now, if we take a look at the stock to flow model, which is you can find in updated live on his Twitter feed, these numbers are a little small and I wasn't able to blow it up, but let me give you an idea. So we're currently trading right around here, around 6,000, 6,600. Right here is 10,000. This is I believe it's a log chart. Yeah, it's a log chart. So it goes from 1,000, 10,000, 100,000, million, 10 million. And what these shaded lines are is the range of outcomes for this model. Now we're currently as I said, around 6,600, 7,000. Come beginning in May of 2020, there's going to be a huge decrease in the number of daily Bitcoins that are produced. In fact, it's going to be cut in half. And I'm not going to go into technical details for that. But what that means is you can see for the past 4 years, essentially, we've been in this sort of trading range on the model. But come this May, the trading range is going to go up. Now, if you take a look at where this really is in terms of the y-axis here, we're really looking at a trading range. I can't give you the exact numbers for these lines, but it's roughly, it almost doesn't matter. The bottom line looks like it's at about 50,000. And the top one is somewhere around, I would say around 300,000. So what are the targets that this model spits out? Well, for 2020, the model is pricing Bitcoin anywhere from $50,000 to roughly $100,000. Now he's got a couple different models, but they're all basically use the same inputs, which we're going to talk about. 2024, the price target. Now I should say this event is going to happen in May of 2020. Now there can be a lag for this. So what Plan B has been saying is that we should expect to see Bitcoin, if this model holds, Bitcoin should be above 100K by the end of 2021. Now I believe this is all going to be accelerated simply because of this guy and what's happening. I think the timeline has really gotten moved up, which is why I think it's so important to pay attention to this. But let's just talk about some of the other targets. So according to the model, by 2024 or thereabouts, one Bitcoin should be valued at $400,000 US. In 2028, the value that the model spits out is $3 million. So let's think about this. You can buy one Bitcoin right now for about $6,000-$7,000. In 8 years from now, it's going to be trading closer to $3 million if this model holds. Now, this model has been a very good predictor over the past few years. You can see that we sometimes go above the model's levels and sometimes below. Right now, we're kind of right in the middle. It's a good time to buy. And the thing is, you also don't have to buy a full Bitcoin. I've gotten a lot of emails from people saying, who has $6,000 to buy a whole Bitcoin? Well, you can buy $10 worth of Bitcoin or $100 worth of Bitcoin because Bitcoin is divisible into something called Satoshis. I believe there's 100 million Satoshis in a Bitcoin. You can double check me on that. But you can basically buy $1, $10, $100, $1,000 worth of Bitcoin. And the kind of multiples we're talking about here are just absolutely enormous. People are always asking me how to turn a small amount of money into $1 million. This is the best way that I know right now. And as a result, I'm heavily invested in Bitcoin. Again, this is just what I'm doing. This is not investment advice. But what we have here is a scientific model, a financial model that is spitting out these numbers. Now, if Bitcoin moves to 100K sometime in 2020 or 2021, there are a lot of institutional investors, a lot of quants, a lot of very smart people who are watching this. And what will happen then, in my opinion, is that we will begin to front run these targets, which is a fancy way of saying that Bitcoin is going to move up much faster than even the model predicts. I think it was Preston Pish who was saying he expects this model to break down, but to the upside. And I think he's right about that, because what happens in financial markets is the market will price in future events as quickly as it is able to. There's still a lot of skepticism around this model, but if it proves true, what you could have is you could have Bitcoin trading at $400,000, conceivably by the end of 2020, certainly by 2021. And what will happen is, just like when people know or have a good idea what the future earnings of a company is going to be, that company will start to trade at those valuations even before the earnings are announced. And we have a similar situation here. Now, where am I getting these numbers, the 50,000, the 400,000, and the 3 million? They are spit out by this model. But if you want a really easy, digestible way of getting to them, you can listen to Stefan Livera's podcast, number 122, where he interviews Plan B and talks about this. So I'm taking those numbers because they're not in the original paper. I'm taking them from this podcast episode. It's a fairly technical podcast episode if you're not familiar with Bitcoin and quant modeling, but still definitely worth listening to. I'm going to stick a link in the description notes below. So how does this model work? Well, so this is the Medium article that you can get. I'll link to this, but you can also get it, just the pinned tweet at the top of Plan B's Twitter feed here. Modeling Bitcoin's value with scarcity. This was actually published in March of 2019. And what it basically looks at is something called stock to flow. Now, stock is just existing. This is terminology that's been borrowed from the gold market and how people value gold. But stock basically just means inventories. It looks like my pen is a little slow here. But stock means inventories. Flow is annual production or mining production. So if we're talking about gold, the stock in this formula would be all the gold that's ever been mined, because most of it hasn't been lost. I suppose some of it's been lost on pirate ships and is under the ocean. But most of the gold that humanity has ever mined is in bank vaults or around people's neck in the form of jewelry. So that's all the gold that's ever been mined. That's the existing inventories. That's what stock is. Flow is the annual production of gold, how much is being mined. And so we can apply this to Bitcoin as well, because we have existing Bitcoin, there's more Bitcoin that's going to be mined, but most of the Bitcoin that's ever going to be produced has already been produced. And we can see if we go to this dashboard, which I'll link to below. Let's see, where does he have it? I think he has it over here. Yeah, if we look at future supply over here, we can see that 90% of all the Bitcoin that will ever be mined will be mined by November 2021, 95% by 2025, and 99% by 2034. Now, the last Bitcoin is actually going to be, all the coins will be mined and issued by 2136. I'm not sure if many of us are going to be around at that point, but maybe. So all of which is to say that most of the Bitcoin that's ever going to be produced has already been produced. And I think if I scroll over here, it tells us how many. It's somewhere here. This is a great dashboard to really start to explore. But I want to say I remember something like 87% of all Bitcoin have ever been produced. So why is this relevant? Well, this is a way, if you look at the natural logarithm of the stock to flow and compare it to the natural log of Bitcoin's price, it gives you a model of how Bitcoin will be valued or priced at various stock to flows. Now, stock to flow, if you think about it, is just a measure of scarcity. And he's got a very nice chart in here of different stock to flow numbers. So platinum, palladium, these are valuable metals, but their stock to flows are close to 1 or below. And so they're not especially valuable, simply because if the price of palladium or platinum goes up, it's fairly easy for the miners of these metals to increase a lot more, to dump it on the market at those higher prices, and thus drive the price back down. Silver is a little more difficult to do that with. You can see it's got a stock to flow of 22. And then gold has a stock to flow of 62. And another way of reading these numbers is a stock to flow of 62 basically means at current mining production rates, it would take 62 years to reproduce all the existing gold that we have above ground, or to replace it. Now, obviously, if Elon Musk or Jeff Bezos harnesses a meteorite or a comet that's full of gold and brings it to Earth, this breaks. But right now, gold is very difficult to mine. It's very expensive to mine. And so even when gold prices go up, the gold miners are not able to really increase the gold supply. Silver, it's a little bit easier to increase the supply, which is why when we're talking about money printing like this, there are different ways to hedge against this. You can have some money in equities, which is quite volatile. You can also have some money in silver or gold. Now, the higher the stock to flow, the more scarce the commodity or asset is. Now, after the next Bitcoin halving in 2020, in May of 2020, the stock to flow of Bitcoin is going to be, I think it's in the high 50s. I think it's mentioned in this paper, but it's going to be roughly close to gold. Now, if we look at the market value of gold, this has probably moved up since this paper was published. This paper has it at roughly 8 trillion for the market, the value of all the gold in the world that's above ground or in vaults, etc. $8 trillion. Now, what is the current market cap or value of all the Bitcoin in the world? 121 billion. So what this means is if Plan B's model holds, and Bitcoin ends up with a stock to flow that's close to gold, it should have a valuation for all the Bitcoin out there that's in the trillions, probably 7-8 trillion, which means that's how we get prices going up as much as we were talking about. Where was that? Right here. That's how you get to prices like 50K, 100K. Now, after the May 2024 halving, if I remember correctly, Bitcoin is going to have a stock to flow closer to, I believe it's 100. And as we've seen, there's never been an asset in the history of the solar system, really, that has a stock to flow that high. Gold is the highest stock to flow commodity or asset that I can think of. Maybe Malibu real estate or some place where there's a fixed amount of housing and there's not a lot of new housing coming on would have a higher stock to flow. Now, obviously, a high stock to flow, you can just see it in Malibu Beach houses. Pricing has a very high stock to flow, and as a result, those houses are very valuable. That is unless the ocean rises and takes some of them out, which I guess would make them even scarcer. All of which is to say, we have this macro backdrop of excessive money printing. We have the stock market continuing to sell off. Even today, it's off the highs. It's sort of a dead cat bounce, which means this guy's going to have to print even more money. And so in that sort of situation, you want to own real estate in high quality areas where it's fairly scarce, where there's not a lot of new building. You want to own gold. Again, these aren't investment recommendations, just sort of at a theoretical level, as well as what I'm doing. You want to own real estate, silver, gold, and in my opinion, Bitcoin. Simply because Bitcoin is soon going to be as scarce as gold. And then after that, just a couple years later, it's going to be much more scarce than gold. There are only going to ever be 21 million Bitcoins created. That means if you own 21 Bitcoin, there are only going to be a million other holders who will be as wealthy as you are in terms of the amount of Bitcoin. So it's a very scarce asset, and the market's beginning to figure out how scarce it is. So it'll be very interesting to watch this model going forward. And if we do see, especially if we see Bitcoin break above its all-time highs, which were in late 2017, it was trading around 20,000. Even if it just goes to 20,000, you've sort of more than tripled your money from here. Once it breaks above 20,000, especially if we have stocks stuck in the doldrums, bouncing around, range bound. If we have continued panic in the general economy, people still aren't going back to work or traveling, and the money printers just keep going, and the unemployment rate is at 20%. Especially in an election year, you're going to have to print more and more money and really start sending checks to everyone. In that situation, people are going to really pay attention to Bitcoin, especially when it starts hitting those new highs. When it trades above $20,000 and has a larger market cap, that will allow institutional investors to begin to participate as well. Right now at 120 billion, it's difficult for hedge funds and really large pension funds, etc. Aside from the fact that it's awfully volatile as well, it's more difficult for them to get involved. But if Plan B's model holds, and again, that's a big if, models can break. If it holds, you're going to see a huge rush into Bitcoin, and it's going to become a very valuable asset. And if you think about it, if this becomes a new store of value, I think it was Trace Mayer who said it's like an infinite stretchable bag or an infinite bowl. Bitcoin is able to hold as much wealth as you stick in it. Just like, call it Los Angeles real estate or Pacific Palisades real estate or Malibu real estate. It's able to hold as much wealth as you want to stick in it. You can have $10 million houses in there. You can have $20 million houses, etc. And Bitcoin is the same way. It's scarce. And so if there's a lot of demand for it, you can have Bitcoin. My personal belief, and I know this sounds a little bit crazy, but it also sounded crazy last year when I was saying that 2020 was going to be a big recession. But my personal belief is that Bitcoin, it will stay volatile, but it will continue to go up for the rest of our lives. And after it hits 3 million, it's going to go to 5 million. And then it's going to go to 10 million. That's going to go to 20 million. Now, obviously, there will be drawdowns. It'll go down 50% here and there, but it will always hit new highs and it will keep going up. Unless something happens, unless the code breaks, which it hasn't broken at this point. But this model, I like it because it gives you a really mathematical way of getting an idea of where Bitcoin should be trading based on its scarcity. If you enjoyed this lecture, be sure to hit that subscribe button. Also, check out my online courses if you're stuck at home and have a lot of free time. I'll stick a link in the description notes below. You can watch all my courses on stocks, options, futures, bear market trading strategies, and you can also follow my crypto investments, which has really turned into just follow my Bitcoin investments at this point. If I find other cryptocurrencies that I like, I'll be adding them. But in this course, I make a new video every week or so, and I show you inside of one of my Bitcoin accounts. You can see how I'm buying it, which broker I'm using, how I'm storing the Bitcoin, and a little more in depth how I'm thinking about it. Thanks a lot for listening. Hit that subscribe button, and let me know your comments or questions in the description in the comment section below. And I'll see you in the next video.